Hello and welcome to another episode of the Bitcoin News Show right here on the World Crypto Network. Thanks, guys, so much for joining us. We have one of the best shows for you ever today, guys. We got tons of people, tons of guests, tons of topics to talk about, so much to talk about. We're going to be talking about many different things, guys. We're going to be talking about Bitcoin. Are the banks going to be afraid of Bitcoin? We're going to be talking about Segwit. We're going to be talking about all sorts of different things. So I'm really excited to get started. Let me introduce the panelists today. We have a great, amazing panelists for you guys today. Lots from the last episode as well, actually. Everybody pretty much seemed to have a great time last show. So let's see if we can keep it going this show. First, I'll introduce Francis, co-founder and head research at Cadillac. How you doing, Francis?
Great to be there. Thank you very much for having me on.
Awesome, man. Thanks for coming back. We really appreciate it. He's on his Francis is on his phone right now. We'll see if we can get him over to his computer at some point during the show. Next, we got Mr. John. What is your last name, John? John Carvello, CEO at Exo Media. John, how you doing?
Good. How are you?
So glad to have you here, man. Appreciate it. We really love you giving your information and your perspective of your Bitcoin business that you run on the daily. Then we got Mr. Pierre Richard, investor, entrepreneur, software engineer, all around pretty smart guy. Also writes over there at the Nakamoto Institute. Pierre, how you doing?
Doing well. Thanks for having me back.
Awesome, man. Really glad to have you. And then finally, last but not least, we got our special guest today, Mr. Ari Paul, CIO and managing partner of BlockTower Capital. Ari, how you doing?
Doing well. Thank you so much for having me on. Really a pleasure to be chatting with the real entrepreneurs who are building the ecosystem.
Absolutely, man. Awesome. We're really glad to have you, Ari. You know, like I say with a lot of my special guests, I've been following you on Twitter for a while. I like a lot of your tweets. I like the information that you have. I've seen you on a couple of other different podcasts as well. So I really thought it would be great to have you on and get your opinion and perspective. You've been in Bitcoin for a while too now. So, you definitely have some unique points. So I'm really glad to have you on. Thank you so much, Ari, for being here. All right, guys, look, we got over freaking 300 viewers already. So I think we should get the show started. We got some awesome topics. Let's start out first with the banks being afraid of Bitcoin, right? Because this is my favorite one, right? So we got recently a wealth investor advisor from Singapore stated that banks are afraid of Bitcoin. And so my question to the panelists, will go with Ari first, of course, being the special guest. Do regular banks or central banks, do they really actually have something to fear from Bitcoin, or can they adopt Bitcoin and then not have to be so afraid of it? What's your perspective on this whole banks versus Bitcoin thing, Ari?
I think the smarter ones are definitely afraid from a few different angles. So central banks are afraid because it removes the ability to print money, which is a topic that in the Bitcoin world we've been talking about for a long time. One that I don't hear said as often, that I think explains Jamie Dimon's antagonism, is Bitcoin also you can think of as providing a service that banks provide, which is JP Morgan rakes in a ton of money every year producing judgment-resistant trusts, basically offshoring client wealth. So you've got a rich individual like Ray Dalio, or you have a company like Apple, and they say, I can't have one judge capriciously freezing all of my assets. So they go to JP Morgan and they say, put my money all over the world, create these complex legal structures, basically to protect my wealth. And all the big banks, that's a big part of what they do in their income. And Bitcoin does it an order of magnitude better.
I like that answer, Ari. Pretty short and sweet. So let me ask you this then. Follow-up question then. Do you see more local banks adopting Bitcoin and becoming Bitcoin banks per se, being able to provide Bitcoin liquidity for things like loans and things like that, or do you just see everybody being their own bank?
Oh, you're asking a longer term question, and I really have no idea, but it's not an easy path to that. So there is such a sharp division between fiat and non-fiat, and that if you're any kind of regulated entity right now, the hoops you have to jump through. Like there's a reason. So as a investment firm, there are only a few banks that will work with us. Like we can't trust having a Citibank or Chase Bank account because those banks on a whim will just shut you down. There's a few banks that have raised the flag that they're cryptocurrency friendly. And basically what they're saying is we're willing to take on all this extra regulatory hassle and risk and pressure because this is our way of competing with the big boys. This is something we can specialize in. But I don't see that changing anytime soon. The idea of having like the existing financial infrastructure embrace Bitcoin is not going to happen in the next 3 to 5 years. Beyond that, I leave it to farther seeing people like Pierre to speculate.
Absolutely. Yeah. So let's go with Pierre next then on this, Pierre. So what do you think about this whole concept of, Bitcoin versus banks? Can the banks adopt Bitcoin and actually work with it, or is it just going to be Bitcoin versus the banks for now and forever?
Yeah, I think Ari set it up pretty well. So I would start off where he left off, which is that the existing financial institutions are not going to, well, they're going to be the last to join the Bitcoin ecosystem. So I think that within the Bitcoin ecosystem, we have to build our own new financial institutions. And there's going to be ones that you could argue are like decentralized. So with Lightning Network, that is going to be you can think of it as a financial institution that's going to provide all the payment processing, all the high volume payment processing that people want to go spend their Bitcoins at Starbucks. But then there's just straight up what we would normally think is a financial institution, which is all the exchanges that exchange Bitcoins to USD. So I don't think that the FX exchanges, like there's Hotspot, there's other names that you've probably never heard of because it's just high frequency currency traders trading on these exchanges. I don't think that they're going to add Bitcoin to their offerings, but it's more likely that the Bitcoin exchanges would start putting in just fiat pairs and additional financial products, and they have a completely different identity, branding, and culture that allows them to do things like having an open API that anyone can access and trading around the clock. So these are kinds of like features that existing financial institutions don't have and are unlikely to adopt. So I think that the fact that we're building our own is best for both fiat and crypto, rather than trying to lobby existing financial institutions to somehow get involved, because they're just too risk averse and they've got the wrong cultures.
Very interesting, because I mean, this is permissionless innovation after all, is it not? Right? This is we don't want to like the early internet developers. We don't want to have to ask permission to be able to actually build something, right? So that is an interesting perspective.
Yeah, I mean, but that only really applies to things that are not fiat to crypto. Because the moment you're touching fiat or holding other people's money, like you end up having to either seek permission from or receive punishment from the government, right? So when we think about permissionless, it kind of has a narrow area of permissionlessness, which is really the Bitcoin network and the open source protocol.
Very interesting, very interesting. All right, let's go to John for his perspective on this. John, what do you think about the conversation so far, and what is your perspective on Bitcoin and banks, or Bitcoin versus banks?
Sure, I have a few comments on this. First, let's not forget, why Bitcoin exists. It's to, remove trust and to not have to trust people to hold your value. So I think there's always going to be a opposite position that Bitcoin takes to a banking system. So anything that's going to be banking with Bitcoin is not going to look like how it looks now, but it's going to look like like what we kind of have already starting, like with Coinbase. Coinbase essentially is a Bitcoin bank for a lot of people that don't feel like setting up a wallet, that only want exposure to the actual volatility of Bitcoin and don't really care about the permissionlessness and stuff like that. They're essentially a Bitcoin bank. So I think we have that a little bit. I think that we should also remember that history has proven that loaning Bitcoin has never been a good idea. I don't think it's something we're going to see become very popular anytime soon, or something that we may never see be successful as a service. It's generally very dangerous to loan it. I don't think you're going to find a lot of people with any brains taking out major Bitcoin loans or giving them out. So again, that's going to probably be a difference. Also, another reason that bankers should be scared, and probably are scared, this was hinted on earlier, but the more they use inflation as a tool, the more power it gives Bitcoin, because Bitcoin's just going to suck that up like a black hole, and the prices would just rise to the occasion. So I think it is a very dangerous thing they need to worry about. Inflation just keeping Bitcoin right alongside them the whole time. And another thing is too, we have to be careful, in my opinion, not to think of Bitcoin as that one day it'll be the sole currency everybody uses, and there will be Bitcoin banks, and this whole infrastructure will just move to Bitcoin. In my opinion, we're always going to have a counter currency, and it's going to kind of be necessary. So I don't think that the existing banking system is going to go away. It might consolidate, it might, become simpler, but I think it'll always be there.
So you're kind of saying that it's probably going to just all be in an app one day that you download, right? That's
well, I mean, Bitcoin is an app, right? I mean,
there you go.
You can't be your own bank. It's just that's the point, and that's why banks are scared.
So let me ask you this then, John. Follow-up question. What do you think about loans on top of Bitcoin? So like maybe layer 2 check, or maybe loans using side chains, or Lightning Network, some kind of representation in between.
My only perspective on loans in Bitcoin is I would love for everybody to go ahead and get a credit card and take out as much loan as possible and just buy Bitcoin with it and fuck the whole system.
Okay, well, there definitely was, some hypothesis about this, actually on the Nakamoto Institute, about how eventually one day, during the hyper Bitcoinization, that people are just going to en masse go out and take loans to buy Bitcoin, and just completely almost wreck the system the current system temporarily. Do you have any comments on that, John? Is that a possibility?
I mean, it sounds too good to be true, so it's probably not as practical as we would like. But I think we've probably seen people do that before. I mean, you've seen these stories on Reddit of, hey, I took out a mortgage on my home and bought, $300,000 of Bitcoin or whatever. You see it sometimes. I don't know how popular it get. I'm sure the government will find a way to mitigate that risk should it become a major issue. But yeah, it is a threat.
Very interesting.
So, I mean, what you're talking about is a speculative attack where hodlers leverage up their balance sheet with fiat to buy Bitcoins. And while we always think of it in this context, it's important to remind ourselves that this concept comes from the world of fiat and from the world of competing trading currencies. And this might surprise some of us, but Paul Krugman has written more about, or started really the study of speculative attacks as we understand them in the kind of post-Bretton Woods system, where the central bank needs to hold hard currency, good currency, in order to stave off a speculative attack. So maybe central banks don't like Bitcoin because it limits their ability to perform monetary policy, but maybe they will pragmatically hold it as a way of staving off speculative attacks if they are intelligent enough to anticipate such an eventuality.
Very interesting. I'm sure there'll be some kind of emergency enactment that will happen to prevent such an attack from getting too crazy. Let's see if we can go with Francis. Francis, are you there?
Yeah, I'm here.
All right.
You just can't see me.
Okay, no problem. So go ahead, Francis. Give us your thoughts on this so far.
A lot of really good points. So I'm going to start to talk about a point that Ariel mentioned, which was that the banks close Bitcoin business bank accounts and are kind of censoring out banks. So this is a topic that's really dear to my heart. Just a second, I have some echo.
No problem. We can maybe show the people my
No, it's fine. It's a topic. Yeah, nice. It's a topic that's really dear to my heart because I've personally had over 12 bank accounts closed. So personal bank accounts, business bank accounts, and so forth. So banks are really big institutions, and they're really it's difficult to identify where the decisions are being made. So for example, if you go to branch level and you try to open a Bitcoin bank account for your business, the branch manager is probably going to congratulate you on your venture and open a bank account. And this is eventually going to be stopped about a year later at the compliance level. So in Canada, for example, all the big banks have compliance policies which prevent them from banking Bitcoin companies. And this is a really big problem because access to a bank account becomes the differentiating factor for an exchange to compete in the market. So they're creating this really huge barriers to entry, and we're not really competing on customer experience or rates or anything like that. We're really competing on access to those bank accounts. which places the banks in a really unique position, which is that they could take over the Bitcoin exchange market rather easily. So if you can imagine one bank that would allow people to deposit and withdraw from their current accounts with Bitcoin, it's clear to me that it would a matter of months take over a really large part of the market, because they would have operational costs that are so extremely low, and they have the resources for compliance and so forth. So, I mean, the banks would be extremely smart to get into Bitcoin trading. However, at the same time, banks are definitely afraid of Bitcoin. So I've been consulting with 3 major banks for a few years, and talked to a bunch of other different banks. And there is an institutional revulsion towards Bitcoin, which doesn't come necessarily from CEOs giving, I guess, a command, but is just a natural, I guess, protective mechanism against Bitcoin. So it's really going to be a difficult challenge. So regarding loaning of Bitcoins and the bank's role in this ecosystem, I mean, if you look at the bank's business model, is basically to scale liquidity and make it available in the market. So they're taking deposits that are being left unused by people, and they're making it liquid by loaning it out and multiplying it. So this is already something that they're really good at doing. If you look at Bitcoin, there's many reasons why Bitcoiners would want to do that. So the first reason, of course, is what John said, being able to take out loans instead of spending Bitcoin. So how do you do that? Well, you can take like 5 credit cards, and I know people who have done that. But another way is also to take a mortgage on your Bitcoin asset. So in that sense, you're keeping the custody of your private keys in the same sense that you would keep custody of your car or your house, and you just simply use it as collateral to take out a loan. So the way to do that is simply to get auditors to put those cryptocurrencies on your balance sheet, and allow the bank to know that you have enough wealth that they could potentially seize if you default on your loan. So you can think about that as taking a margin long, but instead of staking Bitcoins, you're also staking Bitcoins, but you're not putting them on the exchange. Sorry about that, guys. I think there's a lot of echo. I hear myself talking, so it's really difficult to speak right now. Sorry. I'm going to try to fix that.
Yeah, we can hear you just fine, Francis, just so you know. Really great information so far. Does anybody have any follow-up for that before we go to Pierre for a question? No? Okay, cool. So very interesting stuff, Francis. And if you want to continue, do you have anything else to say on that, or do you want me to go to Pierre?
No, that's fine. I'm going to fix my audio first.
Okay, cool. Awesome stuff. All right, so Pierre, go ahead. I think you have a question for Ari.
Yeah, Ari, one of the you said that Bitcoin competes with JP Morgan on judgment-resistant trusts. I wanted to have you elaborate on the mechanics of that. What makes Bitcoin judgment-resistant, and how would someone go about putting their wealth into, or think about, putting their wealth into? Because a judgment-resistant trust, you can put any kind of asset in it, right? Like a business interest or stocks or whatever. This seems a little different.
Yeah, so I'm thinking of it a little bit more in the metaphorical sense, but okay. But I do mean it literally. It's just, so okay, I'll just clarify. So why a judgment-resistant trust, assuming that someone trusts in the legal system. So let's ignore the case where you're worried about a corrupt judge or an oppressive government. So we're only talking about a legal system we trust. So what you're mostly trying to protect in that instance is basically a temporary shutdown of your livelihood, of your business. So all the time, a judge might, here's an example. So if the IRS suspects someone of tax fraud, they may freeze all of their bank accounts. Well, let's say you're that individual and you've done nothing wrong. You haven't been convicted of anything, but you now lack access to your funds, and you can't even hire a legal team. You can't even hire a legal defense. So if you're a wealthy individual, someone like a Ray Dalio, you have money offshore somewhere in some shell entity that would enable you to hire a legal team to defend yourself. And even if you thought, okay, if I end up losing this court case in 2 years, they might get all my assets, that's fine. What I care about is at least I can mount a proper legal defense, at least I have money to live until I exonerate myself. So for almost any individual, I mean, in the US, we have civil asset forfeiture, but of course it's much worse in other countries where someone can arbitrarily have their assets frozen or taken. So I guess the idea here is with Bitcoin, as we know, you can store, you can encrypt your private keys, have it stored with a password, and store those encrypted private keys on cloud storage somehow, on the internet basically, right? So you can access them from anywhere, so that if you can talk to a lawyer, your lawyer can access your funds for you. So what that means is that with cryptocurrency, you always, basically, if you can communicate with someone who can access the internet, you have access to your wealth, or at least some portion of your wealth. So in that intermediate term, while you're waiting for the legal system to work your case through, assuming you trust it, you can hire legal defense, you can keep your business running, you can maintain a livelihood. And then of course, we don't all trust the legal system, and people in many countries don't. So if you're a wealthy individual in China, judgment resistant in that case might mean that some local corrupt judge can't with a single pen stroke capture all of your assets. They would have to apply, they would have to appeal to treaties with other countries. They would have to, I mean, part of the idea of offshoring wealth is it means that for a judge in the US to freeze your assets, they need to coordinate internationally, which takes time, which means that a corrupt judge it's a much higher burden for a corrupt judge to overcome. So Bitcoin kind of serves that same purpose, right? It removes the ability of any individual to confiscate my wealth from me. And people sometimes say, oh, well, but you could be thrown in jail by a judge until you give up your private keys. That's true. But one way I think about it is, let's say it's usually not binary. It's usually not Nazi Germany versus the US. Most governments, most countries, most of the time are somewhere in between, which is to say there's probably the rule of law. There's probably a generally trustworthy legal system, but you have some corruption. You have some bad judges, some bad police officers. So for, let's say, a corrupt police officer to confiscate, let's say, cash sitting in your house, it takes one officer to declare civil asset forfeiture, and then the burden is on you to sue and get it back. It takes one judge to freeze all your assets, one judge to put you in jail, right? But to keep you in jail, to hold you indefinitely, requires an entire legal system, right? It requires not just that one corrupt judge, but you have a whole appeals process. You have an entire system that would have to be lined up against you to indefinitely hold you in jail and deny you access to your assets. So it's yeah, so I think, is Bitcoin a magic bullet against an oppressive regime? No, but there's a lot of cases where it means you would have your wealth that you otherwise wouldn't.
Good points, very good points. Let me ask Ari, and then I'm going to ask Francis too after this. But let me ask you, Ari, in your experience, how friendly has banks been to Bitcoin, and have they become increasingly friendly or increasingly unfriendly over the past year or two?
So Francis said, and actually all the entrepreneurs who are here can probably have more extensive dealings than I do. There are a few banks. So we currently have one strong relationship with one bank. We're actually working right now to set up redundancy, because that is kind of a point of failure for any firm in the industry. We're also going to be setting up international banking relationships very, very soon. We've had good experiences so far, but part of it is we've been fortunate at the work that people like Francis have done in the sense of educating banks, raising the flag that this is a viable business. There are people who will serve. So I think things are probably a little bit better right now, but I don't take that for granted, right? A change in public sentiment, the thing with the banking relationships is it doesn't require a law. It just requires a banking regulator to say, guys, don't do this, or we're going to make your life hell. And then suddenly all the banks say, this isn't worth the trouble. So we haven't had any trouble, but I think we've been both fortunate in our timing, as well as we've benefited from the work others have done.
Very good points. Francis, Pierre, did you have something?
Yeah, sure. Ari, what do you think about someone starting a bank and that would explicitly be oriented towards crypto and would have the ability to hook into ACH and to Swift and all these payment systems so that they can bridge the gap?
So I think that's almost like what some of these smaller service providers have done on all the fronts. So you have, I can name them. So Silvergate Bank is the bank that I believe the majority of funds in the space use, as well as a huge number of companies. They've kind of positioned themselves like that. So that they weren't a brand new bank. Certainly they'd been around for a long time, but they were a relatively small bank who said, this is going to be our business. This is kind of going to be the bet. I don't know that there's any. In my mind, it's very similar to someone just launching a bank from scratch. That's kind of, they're making almost that same play.
Very cool. All right, let's go to Francis then. Francis, first you can respond to what the conversation so far, but then that same question goes to you. What has been your experience with banks over the past couple of years? Has it gotten better or worse?
Yeah, so it's been very interesting. So can you guys hear me?
Yes,
yeah,
sir.
perfect. It's been really interesting actually so far. So when I started out in Bitcoin, obviously we were using the Bitcoin narrative, and in about 2014, the narrative switched to blockchain. And it was, I really liked that change of narrative for only one reason, is that it allowed the bankers to kind of give themselves a face saving out to say, like, in the company narrative, oh, so we had this initial knee-jerk reaction against Bitcoin, but now we see that we were kind of right, because it's actually the blockchain, which is interesting. So this justifies our knee-jerk reaction. We weren't old dinosaurs. We just didn't understand that it was actually the blockchain. And now they started to get into the blockchain space, and they're surrounding themselves by blockchain people. They're sponsoring blockchain hackathons. They're looking at interbank settlements using blockchain. And all those kind of neat use cases, which are not necessarily the digital cash or digital gold aspect of Bitcoin. What they don't really realize is that all the people that are now working for them in these blockchain projects are all kind of Bitcoiners. So this really brings in an interesting dynamic. So for instance, my particular case in getting bank accounts to stay open was the direct result of being a blockchain consultant and being kind of integrated, snuck in the kind of bank consulting process and the bank decision-making process at some kind of levels, and then getting that leverage to say, well, just so you know, 3 of your startups that won a hackathon. One of them, for example, is a startup which allows people to get some insurance in Ethereum if ever they I don't know, flight cancellation or something like that, And I tell them, what are people going to be doing with the Ether? They need to be able to sell it. They need to be able to cash it out. And they know this. So now if they block payment processing companies like Bills, for example, for getting bank accounts, the argument that becomes apparent in our case is that, well, you have all this public narrative, and you kind of put yourself into the blockchain space, but at the same time, you're blocking that blockchain space from actually working by stopping the payment processing companies that would allow people to actually build apps and get access to these funds. Otherwise, obviously, if you have apps that are 100% crypto, you can't cash out in the jurisdiction, they're completely useless, obviously. So this puts them in a really, really weird dilemma now, where they're like really being called out. So that's a very interesting perspective. So now that they're really into blockchain, I feel like it's easier to get them, or they're kind of already involved, and it's kind of easier to call them out on their hypocrisy. And that's the way that the banks are looking at blockchain now. So I really haven't. I wish that my ideas on getting Bitcoin loans and at banks were getting out there. I wish that getting banks to, because banks can really have a competitive advantage, for example, when it comes to Lightning networks, right? So Lightning networks and sidechains and all those smart contracts like Prism, which may or may not work, you need to have a large amount of UTXO available to be able to provide a large amount of liquidity. So you need to be able to, for example, allow people to cash out of a Lightning network for real main chain coins. If they log them for 7 days and need the funds now, you need to have institutions that will allow people to have those Lightning networks be liquid. If you want to make a side chain, and you want to have 1 million coins or something on the other, you need to put 1 million coins in the peg. So they really have a large competitive advantage there. So they're not looking at that. They're looking at interbank settlement. They're looking at Hyperledger. The things that I'm trying to get them to look at more is stuff like timestamping on the Bitcoin blockchain. That's kind of a way to sneak in Bitcoin there. That's been relatively successful. There's a lot of things that they can use timestamping and crypto signatures for, which is not stupid, which is based on Bitcoin. For example, Dodd-Frank compliance. You can do hash links of trade slips, and you can timestamp them and sign them, create a PKI whose keys can be revoked on the Bitcoin blockchain. So you can create these kind of applied crypto systems that are kind of loosely based on Bitcoin. And these are non-monetary uses of Bitcoin that the banks are liking, but they are building on top of open timestamp, Peter Todd's thing, and that's underlying of that is Bitcoin. So regarding the idea to start your own bank, that has been extensively discussed over the years by multiple people. including in Canada's very, very close discussions. Actually, we have a system in Canada of cooperatives where you can like vote in a board, right? So we actually had many ideas to take over a small co-op and basically vote ourselves to the board. It actually did happen in one province of Canada. I won't name it because I don't want it to be too obvious, but a large miner invested in a small cooperative, banking cooperative, making it Bitcoin friendly, and they say they can bank Bitcoin companies. However, what actually happens is that those banks depend on international settlement network, right? So they need to, I can't remember the term, but they need to have another bank where they're connected to in order to process those international wire transfers. And for example, if they want to have a debit card, they need to go through Visa. So they're depending on all sorts of institutions that really, really are anti-Bitcoin. Speaking of Visa, for example, and MasterCard, they may have blockchain hackathons, but they, for example, if you're a POS ISO company and you give a point of sale company to a person which like accepts Bitcoin in the store or sells Bitcoin related apparel or sells Bitcoin, right? So you can sell Bitcoin t-shirts if you accept Bitcoin, or your business that buys and sells Bitcoin, the ISO company is liable. It's against the terms of the conditions of Visa to give you access to that point of sale system. And this is something I have recorded. I mean, selling Bitcoin t-shirts is against Visa's terms because that's brand. So yeah, you can try to build a bank to get the management to say, okay, Bitcoin's great, but the bank still relies on this really deep web of other banking institutions that can kick you out. So in Canada, for example, a lot of people are using payment processors as banks. All right, so imagine you're getting a bunch of PayPal payments. You just have this deal with PayPal. Say PayPal's going to come tell you, hey man, I can actually hold the funds for you, and you can actually like send that money directly to an exchange and buy Bitcoin with it if you want. But it's going to be 5% transaction, or 3% transaction, or 1% transaction, or those kind of rates. So these payment processing companies are de facto acting as banks for a lot of people because they're custodians of fiat. And what we're kind of seeing emerge is as a byproduct of all these banks kind of shutting us out, there's like these kind of settlement network between Bitcoin companies that use payment processors and kind of rebalance fiat and Bitcoin together, which is really expensive. And those costs are obviously passed on to the customer, which is why exchanges have rates and those that don't have rates are subsidized. But so this is all very extremely inefficient. But I mean, there is light at the end of the tunnel in that respect. So yeah, that's it for that. In terms of central banks, one thing I wanted to add is that there are central banks that actually have done research. The Central Bank of Barbados needs to maintain a peg of 2-to-1 for USD and the Barbadian dollar. And they actually did a research about how it would be a really big problem for them to maintain the peg if there was, for instance, a lot of people that would be buying Bitcoins with Barbadian dollars or selling Bitcoins for Barbadian dollars. So they would actually need to have Bitcoins. They postulated, the researchers there, that if that ever becomes the case, then they would need to have a reserve of Bitcoins in order to maintain the peg. So this speculative attack on fiat has literally been studied by the Central Bank of Barbados as a credible threat. And they've been actually doing some work there thinking about that with a local company called BIT, B-I-T-T. So smaller fiat pools that really need to maintain a strong monetary policy. They are actually, I can confirm, they're thinking about hyper-Bitcoinization as a potential national security threat or national economic threat.
Fascinating, man. That is like thinking about hyper-Bitcoinization as an actual like national security threat. That's some pretty cool stuff. That's some forward-thinking stuff. And this is the type of things, the game theory that people are going to really have to start putting some thought into, governments and businesses alike. So very interesting stuff, guys. Does anybody else have anything else to cover on this? Otherwise, before we move on to the next topic. Nope. Okay, cool. So, so far, great conversation, guys. Went a little bit long on that topic, but still awesome stuff. Francis, thanks so much for sharing your insight and your information so far, your experiences so far with trying to get banks on board with Bitcoin. Awesome stuff, man. We got over 720 live viewers here, so I think we can move on to the next topic. But before we do that, guys, just please, if you can, give us a thumbs up, hit the subscribe button, the usual spiel. You know, guys, the subscribe helps us get into, or the like buttons helps us get into more people's feeds. And if you guys are new, please hit the subscribe button. More and more people are subscribing to World Crypto Network. We're putting out more and more content, and we're just having a great time. We're loving all the people in the chat, all the people in the comments. Please, if you guys can't join us live, definitely leave us a comment, tell us what you think, and we'd be happy to respond. So let's go ahead and move on to the second topic, which is Segwit. So we got, I kind of wanted to get the thoughts from the panelists about how Segwit is kind of going so far. So basically, we are seeing Segwit now reach over 4% of the transactions, and it continues to climb. It is on like a steady upward climb. And I wanted to kind of think or ask the panelists first. We'll go with Ari. Like, do you think that Segwit is kind of holding up to what everybody thought it was going to be? Do you think it's holding up to any type of promises that were made? And what is your impressions of Segwit so far? Segwit activation so far. There we go.
Yeah, I think so. Some people have been a little disappointed. I think people who are realistic knew that it would take a long time because it wasn't. I mean, it's amazing. Like when you ask a question like that, like expectations, this is such a diverse investor base where you have some people who have no idea what Segwit is, right? Like the average person who owns Bitcoin probably doesn't know what Segwit is at all, let alone knowing the whole, you know, BIP 148, 148, 141, 148, 91 kind of fiasco. So I think a lot of those people thought, oh, it's a software upgrade. It should take into effect immediately, you know. But all the engineers knew that this would be a slow process because you'd upgrade the wallet software. Even Core didn't immediately release their Segwit integrated wallet because they wanted to test it first. So from my perspective, at least, it's kind of on pace with what I expected, which is I thought it would take a few months before we saw much activation at all because people had upgrade their, you know, the companies had to upgrade their wallets. They wanted to test it first, roll it out. From my perspective, it almost doesn't matter. So the key thing for Segwit, for me as a Bitcoin investor, as a, like forgetting about kind of our firm, which is a little more active trading, for me as a hodler, Segwit was so important because it meant to, literally in my mind, it prevented obsolescence. So with Segwit, we can now kind of do anything. We can have, you know, we can build layer 2, we can, things like, you know, rootstock become probably better on top. So it was so important to get, and we got it. And so getting cheaper transactions, getting slightly larger blocks via Segwit is just temporary, like in my mind, in terms of its importance. With that said, it does seem a little strange that exchanges and Shapeshift and other groups like that haven't been faster to add it, because it does, right, it would save their users money. It would save, to the extent they pass this cost on, you would think their customers would be putting some pressure on them. So frankly, I am a little bit bewildered why they haven't been a little bit more aggressive. I don't know if it's just engineering challenges that are they want to be super safe or what. Maybe the other panelists can weigh in on the kind of why they're not being more proactive to save their own, you know, save money themselves.
Yeah, so in the term, you know, in the case of Shapeshift specifically, obviously things like Lightning probably threatens their business model, right? On-chain atomic swaps might threaten their business model a little bit. But at the same time, like, look, there's always opportunity. I mean, Bitcoin, this is so early. But well, we'll go with John. John's shaking his head over there. I want to hear what John thinks about this topic so far. John, what do you think? You know, about Shapeshift, and then of course Segwit reaching 4% and the conversation so far.
Well, I was shaking my head about this, the Shapeshift comment, because Shapeshift's job is to provide a market, you know, and to provide liquidity for these coins. And atomic swaps, just as a general feature, they don't do that. You still have to have a counterparty to swap with. So using Shapeshift to be able to, like, say, deposit to our website, Shapeshift handles finding that liquidity for you to send me those Bitcoins. Atomic swaps isn't just going to solve that for anybody. They still have a service to provide. So I don't think it's going to make them, you know, go away or anything like that. It could compete with them as if the more people use it, the more liquidity, the easier it'll be to find a match for your coins. But there's still a market that's needed. As far as Segwit, you know, I don't have an answer as to why it's taking so long for some of these exchanges, but I will add an additional layer to the complaint. You know, we have a lot of these people that are talking about doing Segwit 2x and the New York agreement, and they are all, you know, feel like this is such a necessity. None of them feel the responsibility to have to explain why, to quantify or make any attempt to show why this is something that needs to happen. And, you know, even if you want to begin to guess as to why the reasons are, some of those are apparent and available now with Segwit. So if they're worried about, you know, transaction costs, if they're worried about transaction volume, well, now they have improved, you know, an improved network giving them, you know, both of those things, but they're not taking advantage of it. So, you know, you don't see Coinbase, you know, spitting out Segwit addresses or deposit addresses. So what is the issue here? What is the real goal behind Segwit 2x, and why aren't they, you know, doing Segwit? everybody's saying that it's going to take time and they expect this. The thing is, Segwit is not exactly new. It's been around for a very long time. The activation is new, but it's been around and available for testing for quite some time. So there's really no excuse. You know, we had Segwit integrated with our site, I don't know, the first week it was out, and we're small, you know, and maybe that makes it easier. Maybe I don't know, maybe that's unfair to compare, but we did it, and I don't see any reason why organization that it's more important to why they wouldn't do it.
Especially with the resources, I mean, that Shapeshift has and that Coinbase has. I mean, Coinbase just got like a new $100 million funding round, I believe. So it is straight. It does baffle me a little bit on why more of these companies haven't activated Segwit yet. We know that it's a rollout process and not an upgrade process per se, right? Like we want to target certain parts of the application stack, not just upgrade 100% to Segwit. We want to do a little bit here, a little bit there. But at the same time, like I don't see any Segwit transactions coming out of Coinbase or Shapeshift. And so that is definitely concerning, especially when you got Eric, you know, Voorhees on Twitter all day long talking about how great 2x is and how badly we need Segwit 2x. So it's like, yeah, that is very strange. And, you know, and of course, we could get into the politics. I firmly believe, and a lot of people at the World Crypto Network firmly believe that 2x is simply a power grab, you know, to try to take away power from Core. But it is strange that they will at least not get their systems upgraded to Segwit when they say they want Segwit. So we'll go with Pierre next on this. What do you think about Segwit so far, Pierre, in the discussion so far? You know, Segwit taking 4% of the transactions so far and continuing to like reduce fees. I mean, what do you think?
So I mean, to me, I'm not really surprised that exchanges have not adopted Segwit, and the reason I'm not surprised is that they haven't adopted things like transaction prioritization. So picking a target that's further out in the future when you're estimating fees would dramatically reduce the fees. So when you're withdrawing Bitcoins from Coinbase or from Gemini or whatever your exchange is, if they ask you a basic question, which is, do you need these coins in the next 24 hours? And then you could just say no, and they would save $1 at least on that transaction instead of trying to make everything instant, which I get that from a product perspective, they want to minimize the amount of complexity when you're withdrawing Bitcoins, and they want to have a one-size-fits-all solution. But if ideologically they do believe that high transaction fees are causing Bitcoin's usability to go down, they could do their part in solving the problem just by kind of load balancing transactions based on how much people want it to be instant versus a day or even a week for that matter. So that to me is a bigger thing than, from a transaction cost point of view, than adopting Segwit, and would be easier to implement. But I think they also, in companies, you know, they see this as a cost center. This is not where they make their money. They make their money from you keeping your Bitcoins on the exchange and trading them in and out, and that's where they make their money. So they probably don't see it as a big priority from that perspective either.
It's interesting that they don't. I mean, it really can help a Bitcoin business out a lot, I believe, in my opinion. So let's go with Francis next on what do you think about this so far, Francis, the 4% of Segwit?
Yeah, well, I mean, it's actually 5. I was looking at that earlier, so it went a little bit, so that's great. I'm disappointed. Actually, I thought it would be much higher, much sooner. So yeah, I know it's a rollout, but I'm very disappointed. So you guys covered a lot of the things I was going to say, but one thing I would add is I kind of disappointed also at the market for the wallets and the service providers that are so terrible in getting new features, right? So, you know, I use Shapeshift in my app as an API, but there's a lot of problems like refunds, like the way they handle confirmations. Same thing with BitPay. You know, it's not that hard to integrate Segwit at all. Like, I'm not a dev, but I did it. You know, we got a Bitcoin JS utility from Justin Camarena that allows you to derive Segwit addresses directly from a Trezor seed, Trezor master public key. So we receive our Bitcoins to these Segwit addresses. And from what I've understood, we just need to spend them, and they're automatically Segwit transactions after they've been sent to a Segwit address. So, I mean, as far as our integration went, I mean, I'm paying for all my devs myself out of pocket, no VCs. And it took us like, I don't know, like a day maybe to integrate it. So yeah, I mean, we don't have as many users, so there's like less on the line, I guess. But yeah, it's really disappointing. Do you know? So Shapeshift, they must be paying, I don't know how much. I was talking to another Bitcoin entrepreneur yesterday on how many Bitcoin fees we pay per year, and we were paying like 50, 60 grand. They must be paying millions of dollars of Bitcoin fees per year, unless they have some other way that their transactions are getting into blocks and not paying fees or something. I don't know. But yeah, so you look at Copay, for example. Copay, they released Bcash. They didn't even release Segwit. So where's that? Like, why aren't they getting the feedback from the market? Why aren't they getting punished? Why aren't new wallets popping up? It's a little bit disappointing. It's very motivating for an entrepreneur, but it's a little bit disappointing. Maybe it's, I don't know. So it seems like there's a little market failure going on. I don't know exactly why. The service providers aren't really responsive to user demands. Maybe I don't know why. That's what I'm trying to figure out. So how to get like a closer feedback loop and more meaningful feedback loop, and how to get those big businesses to feel the decisions of feel the consequences of their decisions. I don't know. An interesting point that I was discussing at Breaking Bitcoin is that businesses, they say they speak on behalf of users, but we only will know that if they actually vote with their feet after a change is implemented. So it's really difficult to kind of assess, So like, I'm still using Shapeshift, and I still use BitPay, right? I'm still a user of these services, but they definitely don't speak on my behalf. And if they do the 2x fork, I will stop using them because they'll be in another chain, right? So it's interesting. Maybe we need to have a big, I guess, the great redemption of Bitcoin, to have like 20% of the companies go bankrupt as a result of the network split. I don't know. Maybe that would be a good thing. Or maybe we need another price drop, like Vinny said, so that Bitcoin businesses aren't subsidized like ICOs are by just this money coming up, and the incentives of innovating being removed. So yeah, really interesting kind of thing to think about, like why the market is not acting as we would predict if it was really rational and with transparent information.
Yeah, lots of good points. Oh, but go ahead, Ari. Go ahead.
Oh, so just I thought in terms of why the market isn't kind of correcting this. So the vast majority of users of a service like Shapeshift and Coinbase have no idea what fees they're paying. They don't understand the fee market. They don't know what Segwit is. That's not the decision. Like, there are very, very few users who are saying, I'm not going to use Coinbase. I'm going to use this other service X because of a slightly different fee. That's like such a tiny percentage of users. So Coinbase is onboarding, they say something like 40,000 users a day. That relieves a lot of pressure. That's why they took so long to get, for example, customer support by phone, because they didn't need to. If a customer was upset at them, who cares? They got 40,000 new customers coming in the door the next day. So I think it's similar to ICOs, similar to, like, we're in a boom cycle right now, right? Where the existing services that are decent at marketing, at branding, they're getting more users than they can handle. They're literally overwhelmed. The exchanges like Bittrex, Poloniex, they're adding so many new users that there's no pressure on them to do really anything. I mean, you talk to them, they're literally just trying to tread water. They're just trying to stay ahead of this massive wave of demand. Why they're not, that's not a reason as to why they're not implementing Segwit, I don't know, but it's a reason why they don't feel pressure to, at least, because, okay, maybe instead of that day, instead of getting 40,000 users, they get 38,000, it doesn't really matter. So I think a lot of this stuff, the pressure from the market, will happen once we're no longer in a boom period. Once you start seeing same with exchanges, like there's a lot of very shady exchanges, poorly run, no customer support. And they can do that as long as there's a massive flood of new users entering every exchange, right? Once that stops, once you have consolidation, then you'll have pressure on the exchanges economically to actually offer good service, to do audits, and you'll have pressure on the fee side as well.
Really good points, Ari. I mean, that's exactly what we're seeing. We're seeing this massive boom of people coming in, so much so that the companies just simply can't handle it. It is stressing the Bitcoin ecosystem. It absolutely is. I mean, like you said, every single company, I mean, every single exchange pretty much at this point in this space is experiencing massive growth. So I guess that to me is a partial explanation anyway of why the hell these people aren't, keeping more on taps of the latest features with Bitcoin, because they just don't have an economic incentive at this time to do. But eventually, obviously, they will have to at some point once we consolidate. So very interesting points. Thank you for that, Ari. I think if nobody else has anything else to comment, we can move on to the third and final topic today. Yep. All right, very cool. Thanks, guys, again so much for watching so far. We have over 800 live viewers right now. hope you guys are having a good time, and as good as time as I'm having. This is some awesome conversation. I don't think you'll find this kind of stuff anywhere else, guys. So really, thanks for joining and tuning into the World Crypto Network today. We got one final topic left to go, so let's get into it. Basically, Mr. I'm going to butcher this name, but Mr. Ariel Deschapell recently wrote an article entitled "The Economic Case for Conservative Bitcoin Development." And I want to hear from the panelists. Like, do we think that Bitcoin's dev process is currently conservative? And what are the benefits and downsides of that? So Ari, first we'll go with you. There is a lot of that is used as a defense a lot of times in the core camp that we're trying to be conservative of, we're trying to make sure to keep this network up and going. What are your thoughts on this? Is this how you see the path that core is going, or that Bitcoin is going in general? And is this good or bad? What do you think?
Honestly, it took me a long time to understand this. Absolutely, I think for Bitcoin conservative development makes sense. The way I think about this market, and by market I mean cryptocurrency broadly, is kind of a rough bifurcation. So you've got this competition to be the store of value that is unseizable, censorship resistant. I think that's probably a natural monopoly. Maybe you end up with one or two, but you're not going to have 15 competing cryptocurrencies for that in 10 years. And what makes a good censorship resistant store of value? I don't think fees matter. I don't think confirmation time matters. I think it's all about stability of protocol, right? This is code that can be buggy, as we're occasionally reminded when things like you have the Ethereum parity wallet hack, right? So you're talking about, if you're trying to get someone to put hundreds of millions of dollars into this, the stability of the protocol, the fact that it's relatively unchanging is critically important. And then things like decentralization, that it truly is censorship resistant, is kind of everything. So I think if I use a traditional economic or competitive strategy analogy, Bitcoin is like Lloyd's of London. It's not competing on fees or confirmation time or features. Its main value proposition really is stability and security in all regards. And without that, it kind of has nothing. And with that, it has everything. And you have other cryptocurrencies that are competing more like trying to be the Uber. So if you're competing on features, you have to move fast and break things. If you're competing to be the best, to be the P2P payment channel that's integrated into a browser, you probably have to be optimized for that. Their confirmation time matters a lot, fees matter a lot. If you're trying to be a smart contract platform, your usability, the ease at which developers can code, all of that, you're competing on features. And this is a new technology. And so the idea that you can't upgrade constantly doesn't make sense to me, because you're going to be obsolete almost immediately. So I think there's kind of a bifurcation. For Bitcoin and anything else that wants to be a store of value, be hyper conservative. For almost everything else, you have to be hyper aggressive, because we're still in the experimentation phase for almost every other use case.
It's so interesting how subtle, like that, the between those 2 points. Like you said, it is a bifurcation. It's so subtle that most people just don't catch it, right? They're used to Silicon Valley. They're used to this move fast, break things. Let's just mess with stuff. They're used to that. And in many ways, and in most ways, and in most cases, that's great, and it's to be celebrated. But there is such a huge difference, and it's such a fine line between that kind of thinking and then like trying to keep Bitcoin up, trying to keep Bitcoin stable, consistent, resilient, just immune almost to almost every kind of threat that could ever attack it, and the threats that it's not immune to becomes immune to during the process of threat. So yeah, really interesting stuff. Thanks, Ari. Let's go to Francis next on this. Same question to you, Francis. What are your thoughts on this?
I agree with what Ari said. Maybe to add a very similar perspective is I really think, and I wrote about this in the article I published a few days ago. I think that innovation happens at the edges, and it should be encouraged to happen at the edges, because the process of innovation, which is the exact opposite of conservatism, is, in my particular context, is that innovation requires a lot of suffering, a lot of death, a lot of startups failing, a lot of bad ideas getting burnt by the market. And you want to foster this process of entrepreneurs and inventors trying stuff out and getting wrecked, because that's how innovation happens. And the way to foster that is to make it forgiving, right? And to make it so that this process innovation doesn't really have those really large external negative externalities. So if you have this, if you have the innovation at the core, well, you can't have innovation at the core level. For example, you look at Bitcoin Core, the culture, the context is not forgiving. It does not foster experimentation at the protocol level. So it's just, it's hard to make it happen there. There are innovations, right? So obviously, I really don't want to say like Lightning Network coming out from Core is that's kind of that's not exactly what I'm talking about. But you don't want to have the failures of innovators to really have this big impact, this big negative externality. So this is why I think a lot of the experimentation needs to happen on the second layers. And the first layer I'm talking about is not like Lightning Network, it's like the applications and the wallets and all that kind of stuff. So when you're talking about problems in Bitcoin, do you really want to solve them by fixing the core protocol, or perhaps all the wallets getting together and getting their act together and implementing a certain feature or trying certain stuff out, a new fee estimation, new type of transaction propagation, or that kind of stuff. So I really encourage that innovation to happen at the edges, which is why I'm very happy that Bitcoin Core is very conservative. I think that that's the reason why altcoins exist. Altcoins are at the ultimate edges of Bitcoin. It's a really nice laboratory. I'm a Bitcoin maximalist, but that's kind of an outcome that I get to, and that's not a preconceived bias. I look at the other altcoins and I see them as being, not so good. And if there's one that happens to have like really good features and they can test it out in the market and wow, it has traction, look at, Monero kind of has traction. Maybe we can look at what they're doing and what they're doing wrong. And look, they've just reduced their block size, or they've just increased their block confirmation times, and what happened. So let's observe that innovation happen there. And let's just, look at the market validated winners. And I speak about technologies, right? So look at the technologies that are market validated winners, and then you scale them in Bitcoin, in the network effect of Bitcoin later on. You don't experiment and hope that, at the core level, something is going to come out.
Yep, lots of good points in there. Francis. Thanks so much for sharing. Let us go with John next, and then Pierre. So, John, your thoughts.
Sure. I'm going to try to take a little bit of a different side of this just for the sake of discussion. I used to consider myself a staunch Bitcoin conservative. And to me, conservative means being a Bitcoin minimalist, not necessarily a maximalist. And that meant not wanting any change to the protocol ever. It works as is. This is the only way to keep it reliable and just to not fuck with it, And over time, you come to see that there's plenty of innovation that can be done and is being done that can be done responsibly. So I don't think it's about necessarily Bitcoin conservatism so much as being responsible and actually making sure that anything that you're changing about the protocol is done in a safe manner and in a well-tested manner. I think there's tons of innovation going on, so I don't think it's really fair to look at it as a conservative approach. I think that I remember when Ethereum was first starting to get really popular. And I remember talking to Bitcoin maximalists, core devs, a lot of people, they almost had a jealousy to seeing how Ethereum was capturing the hearts and minds of young developers and getting all of this attention. And they didn't like to see that being siphoned away from Bitcoin. They wanted that to be part of it as well. And you have Bitcoin Core making innovations. If you look at their plans for the protocol, what they've done is they found ways to take their innovations and remove them from the core, protocol and put them into things like the second layer. That's their solution for being able to innovate safely. They're saying if you want to move fast and break things, do it on a side chain. Do it through these things that won't affect the core of the network. So, I have a little bit of a different perspective on it. I don't know that necessarily it's conservative so much as responsible or scientific or whatever the word may be.
Great points. I mean, I have to agree with that too. I mean, because I don't see Bitcoin Core too much as conservative either. Even Beautyon just mentioned in the chat, he said, Core is not conservative. Their roadmap is in fact ambitious, but they are cautious, right? Which is an entirely different thing. And so cautious and responsible is really what I see it as. And like you say, John, they are creating, abilities for you to go and do whatever you want with like layer 2, with sidechains. Hey, I hope people go nuts over that stuff. I mean, I really think it's going to really swipe through and take out most altcoins. In fact, I really believe that a couple of years down the road, most experimentation will happen with on top of Bitcoin. But it'll be done in, like you say, a responsible way, somewhere where we can't mess with the core part of what makes Bitcoin Bitcoin. It's something where we can't break or take down the entire network, like what happens to Ethereum with every new ICO. But that's something different, you know. Like we really what we see, you know, in Ethereum land over there is that they really like shiny objects. They really like shiny new toys, and that's great, you know. And we love to have experimentation. But you know, it seems to me that Bitcoin definitely cares about network uptime and stability much more than anything else, much more than any other altcoin, much more than any other platform that I've ever seen, almost in my entire life. And that has manifested itself in, you know, almost 100% uptime in the last 9 years. So that's kind of the end result of that is this thing that is just so stable, yet global, yet updates every 10 minutes across the planet for the last 9 years. Like, just absolutely fascinating stuff. So let's go finally with Pierre, I believe, is the last one to comment on this topic. Pierre, what do you think about the discussion so far, and what are your thoughts?
Yeah, I would echo the sentiments that it's more about having a disciplined approach to software engineering than being conservative philosophically about what's going on. And then the other aspect is that I think that the word innovation is kind of overused in Bitcoin's context at this point, because to put it in Silicon Valley speak, Bitcoin has found product market fit, and it now needs to iterate on its core strengths. And so to me, like, adding a bunch of tests to Bitcoin Core so that the node code can be refactored and we can make sure that we stay within consensus, like, that's much more interesting than theorizing about how we're going to run the world with JavaScript on Ethereum. Like, I think it attracts a different personality type. So there's so much low-hanging fruit in the Bitcoin as a currency and payment system world that I don't find the other use cases particularly interesting. Like when people start talking about using side chains to trade crypto equity or other assets, like that sounds nice, but there's so much to be done with the currency and payment system. And we're seeing, like, with 0.15, like, there was a lot of what I would describe as innovation, but it doesn't pass the bar for a lot of people who see innovation as, you know, something that's a promise made on a landing page by a marketing person.
Absolutely good points, Pierre. I mean, there's just so much work to be done just in payments. There's so much to be done. There's just so much to fix. So many problems that we have with our global financial system. And yet, you know, we have these people like Ethereum that are just like, let's do smart contracts. It's like, hold on a second. Do you not see what happened in Cyprus when their money was literally confiscated from them by the banks? This is the type of situations that I find that Bitcoiners are concerned about, rather than Ethereum people, you know, because it does attract a different type of personality, and that's fine and great. Hey, more power to it. But really, what I'm concerned about, the problems that concern me and the Bitcoiners that I see are real problems in the world with our current financial system, with payments, with corruption, you know, with fees, with the stuff that's just been so bad to us. We're talking about remittance levels of some people getting, you know, fined 25% of their money, 25% to the poorest people on the planet. This type of stuff is what we want to say, what we want to get rid of, you know, at least that we want to improve. We want to have the ability for borderless. I mean, the borderless payments is just so powerful in and of itself with Bitcoin that's going to change the world that people don't understand. And so, and remember, this stuff is not easy to understand. You know, you got geopolitics, you got computer science, you got all this crazy stuff. But at the end of the world, look, at the end of the day, look, we're trying to make the world a better place. That's what we're trying to do with and every day with everything that we do. And we believe, you know, at the World Crypto Network that Bitcoin is definitely going to be one of those things that's going to help improve the world. And we're not just focused on the next shiny toy, the next thing that Silicon Valley can put some VC behind. You know, we're not concerned with VC dollars. We're concerned with helping people. And so we'll see where it goes. But on that note, I got off a little bit of a tangent there. Does anybody else have anything to comment before we wrap it up? Nope. Okay, so it's been a great show, guys. Thank you guys so much for watching. Over 830 viewers we had at the peak there. So I don't know what the hell you guys are doing on a Sunday, but you need to find something better to do. No, we thank you guys so much. We appreciate it. We're here every Sunday. Let's find out where we can find these amazing panelists and their amazing work. So let's first start out with Ari. Ari, where can we find out more about you?
Well, I'm way too verbose on Twitter at Ari David Paul. That's probably the best place. I have a website, thecryptocurrencyinvestor.com, where I've been trying to write longer essays, but actually one sentence on that. So I was writing a series of how to think about cryptocurrency investing, and I've been flattered at how many people have said, "Why did you stop at number 2?" And the answer was because 6 months ago, I really kind of discovered just how big atomic swaps were in trying to think about a competitive strategy and where the value accrues. So basically, I'm very comfortable kind of tweeting something when I actually have a fully formed thought that I've vetted with people much smarter than me. Then I try to post it on that website, cryptocurrencyinvestor.com. But it takes me a while to actually hit the bar of an essay. So I'd say follow me on Twitter and we can chat.
Awesome. All right, John, where can we find out more about you?
You can find me on Twitter at Bitcoin Errorlog, and you can check out my project exotica.tv if you're looking for a good time.
All right. And they take Bitcoin, ladies and gentlemen. Pierre, where can we find out more about you? Oh, you're muted.
Unmuted. Okay. Yeah. Twitter at Pierre_Rochard. I spend way too much time on Twitter. We created a Nakamoto Institute Keybase team. So for those of you who aren't familiar with Keybase, it's basically a way of keeping track and cryptographically verifying your social media accounts. So they launched a new product called Teams, which essentially you can think of it as Slack plus crypto. Let me know on Twitter if you want to join us. A lot of fun in there. And of course, go to nakamotoinstitute.org, read every single last page on that website, and let me know when you're done.
Every single page, people. And if you got any questions, definitely hit up Pierre. He'll be more than happy to answer your questions on Twitter. As he said, we're all on Twitter far too much these days, but hey, that's the water cooler of the planet right now, right? That's where we go to find out what's going on. So finally, Francis, thanks again for your insights, man. We really appreciate it. Tell us, where can we find out more about you?
So like Pierre, I spend way too much time on Twitter, and I have open DMs. Shouldn't be saying that now, actually, shit. But yeah, so send me a DM on Twitter. I usually answer them, and it's the best way to contact me. I also hang out in the Nakamoto Institute Keybase group. Or you can email me at francis@satoshiportal.com for business stuff. So if you want to encourage me, you can go to bills.com and spend your Bitcoin, but only if you earn your income in Bitcoin, please. Try to buy back those Bitcoins if you pay your bills with Bitcoins. If you want to buy Bitcoins, you can check out my brokerage, bitcoinoutlet.com. And if you want to do any kind of, if you need any advice regarding tax or audit or stuff like that with Bitcoin, check out my new company, catalexy.com. So we are taking, obviously, the sides of Bitcoiners in those complicated legal and fiscal matters. So check us out if you want to put your Bitcoins to work or put them on the books.
That's right. That's right. Awesome, Francis. Thanks so much. And ladies and gentlemen, surprise guest joining us, Mr. Thomas Hunt, a.k.a. Mad Bitcoins, coming in to close down the show yet again. Thomas, how you doing?
2 weeks in a row, I make it to the end of the show. It's 10 o'clock here in Amsterdam, so I'm trying to talk quieter. But I just got back in, was hanging with a friend of mine, a Bitcoiner that lives in the area. We went all over. We had dinner and stuff. We were hanging out. I went to the Anne Frank house today. It was very sad. Don't want to bring that somber moment into here, but it was a really good tour. And just wanted to say hi to everybody. You can follow me on Twitter at Mad Bitcoins. Like everybody else, I'm on Twitter a lot. And thank you guys so much for doing the show, and thanks for being on the World Crypto Network and enjoying my trip. I'm going to go to Berlin probably Wednesday or Thursday of this week, and then a couple days in Berlin, and then on to Prague for the Hacker Conference in Prague. So hope to see everybody there. So
Thomas, will you be making it to BlockCon October 10th in California?
No. Like I told the guy, he was like, yeah, you should leave Europe and go to LA. And I was like, I've been to Los Angeles.
Yes, Thomas has been to LA many times, ladies and gentlemen. So again, thanks guys so much for joining us. Definitely follow Mad Bitcoins on Twitter, #MadTour right now. He's got a ton of great images and content from all over the world. And, you know, we covered Breaking Bitcoin. We covered a bunch of conferences over there, Tone Vase, and of course, Mad Bitcoins, and then even Jimmy Song. And of course, please catch us, guys, every single day, every single morning. We do a morning show now, Today in Bitcoin. It's been absolutely great watching, Tone do the markets and Thomas bring in the topics and Jimmy get to the technicals. So definitely follow that, guys, if you haven't yet. Subscribe to the World Crypto Network. And then, of course, on Fridays, we do the Bitcoin group. Whenever Thomas, of course, gets back to the States, we'll be continuing that.
Technically, we didn't do Today in Bitcoin this morning because my laptop battery was dead. So, and every time you put something off and you're like, I'll do it later, it never happens. So do your things on time, people.
That's right. That's right. That's how we do it live over here on the World Crypto Network. So again, guys, thanks so much for joining us. We will be back again next Sunday at 12 p.m. Pacific. We are here every Sunday at 12 p.m. Pacific. So until next time, guys, please keep on talking Bitcoin. We'll see you later.